Hey guys, Mike here. So imagine being able to get in on Amazon between like 100 to 200 bucks, and I'm going to show you a company that's basically going to give you an opportunity to do that. And I think this is without a doubt going to be the top IPO of 2021. I mean, and the potential is it's crazy, guys. I mean, it really is. I'm going to go into detail about everything about the company. We're going to dig deep into financials, the growth rates. We're going to compare them to Amazon. And so I'm really excited about this video. Make sure you watch all the way to the end, or you're going to miss something really important, okay? Because this IPO takes place this week coming up, okay? And so if you're getting out of it, all I'm asking, hit the like, subscribe button for me. Help me beat that YouTube algorithm. I really appreciate it. And if you want to join the 9 Asset membership, you can hit right there, the join button down below, and I promise you get your 99 cents worth, okay guys? And what the heck, if you want to open an account with Webull, right there is a link as well. This might be a good time to start buying on these dips. We shall see. I'll talk about that a little later on tonight. And so without further ado, let's get into this company.
We got some breaking news this morning. Possibly the biggest, could be the biggest IPO of the year. South Korean e-commerce company COUPANG filing for an IPO. It's going to be listed under on the New York Stock Exchange under the symbol CPNG. This is a company that started in 2010. It is the equivalent of Amazon, DoorDash, and Instacart in one company. It is growing, it looks like, at something on the order of 90% a year.
This company is called the Amazon South Korea for a reason. I mean, you can pretty much buy anything on their website, and they even go one step further because you can get groceries, household items, anything you can imagine. And I mean, they even have Coupang Eats, right, where they deliver food. And so, I mean, if you look on here, you just go on the app, look up what you want to eat, and then they deliver. It's kind of like DoorDash, okay? So they even have that as well. And if you look on their website, I mean, this is set up just like Amazon, right? You got your left side here where you can filter everything down. You can search for anything you want to. There's a little basket of stuff you have to order. And so as you can see, they're set up just like Amazon, right? But I'm going to show you where they're a little ahead of Amazon right now and the reason why. And another reason people are so excited about this company in particular is the market they're actually in. Because, here's some facts for you to understand. Korea is the 4th largest economy in Asia and the 12th largest globally as of 2019, with a GDP of 1.6 trillion, which I admit I did not know that. The total spend in retail, grocery, consumer food service, and travel in Korea was $470 billion in 2019 and is expected to increase to $534 billion in 2024. It's considered one of the largest and fastest growing e-commerce opportunities anywhere in the world, and the total spend was $128 billion in 2019, which is expected to grow to $206 billion by 2024, implying a compound annual growth rate of approximately 10%. And just to compare that to the United States when it comes to e-commerce sales and growth, we are not an emerging market, obviously, and they are. If you look at the growth that's projected over here, you got an 8% growth rate, and then from here it goes anywhere from 5 to 6%. So they're almost doubling because they are an emerging market and growing rapidly. And so as you can see, the market they're in is expanding rapidly. It's going to continue to expand rapidly. And so now I'm going to take you into basically what makes them a little different than Amazon and gives them an advantage right now and why they're going to be able to grow so fast. And while they're very similar to Amazon, they have what they call the Coupang Wow Rocket membership. So it's kind of like Amazon Prime if you want to do that. And 32% of their members currently pay for that. And where they differ, though, is Amazon is starting to have physical stores and Coupang does not have that. But what really helps them is the fact that they've been able to break into the grocery sector much faster than Amazon because of how fast they can deliver. And that's very simply just because of this stat right here, which is kind of staggering. And that stat is that 70% of all Koreans live within 7 miles of one of its 100 fulfillment centers, which is just crazy to me. And this allows them to have 99.3% of its orders delivered within 24 hours of purchase. And Amazon definitely cannot do that yet. And they even took it one step farther and started doing dawn delivery, where the customers who ordered before midnight would be guaranteed a delivery by 7 a.m. the next morning. And because of all those facts, their revenue totaled $12 billion in 2020, up 91% from 2019. Net revenues per active customer rose by $256 in the fourth quarter of 2020, up from $161 a year earlier. And the active customer base climbed to almost 15 million in 2020, up from 11.7 million in 2019 and only 9 million in 2018.
And so the fact that people live that close to their distribution centers is just, I mean, it gives them such a huge advantage on the deliveries, right? And then you see the numbers growing rapidly. So now what I'm going to do is take a deep dive into the financials, okay, into their prospectus they put out actually this month about the IPO and stuff. And so we're going to take a deep dive into those, the growth rates, the margins, everything, and kind of compare apples to apples when we compare it to Amazon. And then I'll go ahead and give you what I'm going to be doing next week.
And getting even more in depth to the financials, guys, you know, if you look, I mean, they've grown dramatically from 2016 to 2020, their revenues. And I mean, back here from 2016 to 2017, it's about a 44% increase, which is really impressive. Then we go to a 68% increase, a 55% increase, and then a whopping 90% increase, which no doubt, of course, had to do with the pandemic for sure. But even looking at the previous years, you're talking between 50 and 55% revenue growth. And just to compare this to Amazon, in this pandemic year right here, they only grew 38%. And if you go back to 2016, for the last 5 years basically, they've only been growing anywhere from 20 to 38%, which is still impressive, but they've been around so long, their hands are in so many cookie jars, that's just what happens. And so the growth rates aren't even comparable right now. And where the real pain for this company comes, and this is natural in a basically business model like this, where it's all dependent on volume, the margins are very small when you're first starting out. You know, you're going from 8% margins, now they've doubled it though, to around 16 to 17%, and so that's an improvement over the years here. And more importantly, I want to go down and look at the net loss here, guys. From 2016 to 2018, obviously it just kept getting bigger and bigger, but now look what's happening. 2018 to 2019, they almost cut it in half, and then they shrank it again in 2020. So they're heading in the right direction, which is what I really like to see. And speaking of margins, if we go up here and look at Amazon real quick to compare it, margins for them is around 40% now, and so obviously COUPANG has a long way to go to actually build that up. But you know, Amazon was not at 40% years ago. I can tell you that right now as I've looked at the financials. And then if we go back and just kind of take a different look at the percentage of revenue when we're talking about year-over-year growth, and this is in billions. And if you look at this right here, I mean, they've already 4x'd from 2018 to 2020. And so, you know, they're growing per quarter. You see the growth per quarter here? I mean, there's nothing less than 50% on average it's seen. And then look right here. I mean, 2020, this is a pandemic, right? Everything was over 90% each quarter with the revenue. But realistically, I mean, you look in the lowest is 54 or 52%, excuse me. So you're looking at a minimum 50% every single quarter, I think, going forward as they continue to grow and add different services and things of that nature. And when you see numbers like that, you're probably thinking, man, this company must hold a gigantic footprint in Korea, and that's absolutely not true. They are the largest e-commerce player in Korea, but they only own a very small percentage of the market when it comes to retail, grocery, consumer food service, and travel spend, because the total addressable market in 2019 was 470 billion, and that's expected to grow to 534 billion. I just showed you their revenues, and so there is so much more of this market that they can capture right now, and that's why they're not worried about going outside Korea right now.
Would you ever expand outside of South Korea? People don't even appreciate, I mean, having been there and seen what goes on, COUPANG, it's like you can't buy anything without this company. It's like, I don't know if it's I don't want to call it a monopoly. Nobody likes the word monopoly, but literally like 1 out of every 2 diapers in the country sold by this company. It's kind of a crazy situation. Would you ever expand outside of South Korea?
Well, you know, the constraints that we're solving for are shared by a lot of markets in Asia, but, you know, Korea is one of the largest and fastest growing markets in the world. It's the 5th largest e-commerce market in the world today. It's on pace to be the 3rd largest e-commerce market in the world in 3 years, just behind China and the US. So there's a lot of opportunity in the home market, and we're focused on the home market today.
And really, looking at Amazon, guys, I mean, here's what people are hoping with this company. They want to get in somewhere in here, right? Between 100 to like 300, somewhere in there, because people know once these companies start to take off, they trade at higher multiples than others, and especially a company that could possibly go global one day and stuff like that. And you see when they take off, you know, they are millionaire makers. That's just the way it is if you get in. And so that's what people are looking at. That's what's got them so excited. They're always looking for that next Amazon, the next Netflix, the next Microsoft, Apple, that kind of stuff. And who knows if this is it, but boy, the possibility seems pretty dang good that it is.
And so as usual, I would love to get your thoughts on this company, what you think. I think the potential is gigantic, okay? And this is not, I mean, this is definitely a long-term play if you're getting in on this, right? I mean, imagine if you had bought an Amazon at 200 and sold at 500. I mean, my Lord, you're kicking yourself now, right? And so this is just one of those companies. There is so much potential. I really like the CEO. I really do. I've seen multiple interviews with this guy. Obviously, he's built a heck of a company, and he has had multiple buyout offers from larger companies and turned them down flat. And so, you know, there's just so much potential here, and just in their own market, if they ever do decide to go outside the market, we'll see how they do. But also, he's talking about, you know, they're going to be expanding just like Amazon did, right? They're getting into fintech now with a COUPANG Pay, and then they're going to be getting into other areas as well. And so that's what Amazon done. That's what they're going to do. And they've been able to learn from how Amazon did it, right? Remember, Amazon has been around since 1994. Started off as a basic online bookstore, then expanded from there. And so they've got to see how they've grown, kind of copy the business model a little bit without the mistakes. And so it allows them to grow faster. That's why they've been around for 10 years and been able to do what they've done so far. And so we'll see. For me, I definitely will be sitting there hoping that this thing, you know, if the market's down, I don't think it'll do that crazy run like DoorDash and Airbnb did, where I think it tripled before it ever even got to the public. And so this being a traditional IPO, which I hate traditional IPOs, this is why I hate traditional IPOs, because the institutions get a huge advantage and the millionaires get a huge advantage over regular retail investors, because they're going to get to buy really low and they're going to run it up before it ever gets to us. And then usually what happens is they run up and then they sell off, right? Because people take profits, and then they'll start running up again. You see it in Airbnb right now. And so, you know, I want to get in on this. We'll see what happens next week. If it triples before it even gets to us, I don't know. I mean, I may just go ahead and take the dive and just get a small position anyway, which we shall see on that. I definitely won't in on this company though. This is going to one of the top of my list to hold for years, okay? Because there's no doubt this company will continue to grow. Will it do 90% in a regular year? Probably not. I seriously doubt that. But, you know, will it do 50%? I feel confident about that, because even in pre-pandemic years, they were doing that. And so I just think the sky's the limit with it. I really do. And so we'll see how it goes. Let me know what you guys are doing. And so I'm going to come out with another video tonight talking about recovery stocks, things like that. I've done some research into those as well. And I'll let you know about those as well, okay? So I hope you guys enjoyed it. Hit the like and subscribe button if you did. I really appreciate that. Share the video with your friends, your family, and everything else. Helps the channel grow. And thank you for all your support. And I'll see you guys later.